Hey, Dave Knight here at 123daytrade.com. Thank you for watching. Thank you for being here. It's been a while since I've been in front of the camera, in front of my trading station. You can notice I got 57 ticks today, but I could have had a heck of a lot more. Let me show you the trade setup today. And actually, let's just look at the 15-minute chart because I set this up last night. It's a Fibonacci extension, and look where it went to. Went down to the 100%. Let me change colors here so you can actually see this a little bit better. That color works a little bit better. So here's your 100% mark at 37. What does that say? 37.99. I came out of the trade, I believe, around here at 60. Well, close to. Well, I was before that, but 61.8% was where I was hunting for on the trade, which also coincided with what else? What else would it coincide with? 38.94. When you have two or more start to accumulate at a number, it can be a powerful number to reach. So in this case, you had the 61.8% Fibonacci retracement on the extension available, and you also had the Gann square of 9, and you had 137.5, or the magic number as I like to call it, on the table as well. So we have two or more congregating at the same point, and then you have the 6P at 38.92. You had three different items that were coming in here based upon the entry point, 40.18, and the overnights that culminated in, and when you get two or more of these to work together in your favor, it's like a snowball. It's the best way I can express it. You see a snowball, at that top of the hill, it doesn't look like it's going to do anything, but as it starts rotating and gets more mass, it gets harder and harder and harder to stop. That's what was like trading a short side trade when you catch a nice momentum trade. That could have been a huge win for me. Let me show you where I moved to break even on this trade on the session. You always kick yourself sometimes when you make your trade decisions and you think, well, should I move now or should I not move? So the setup itself that I liked was similar. If you remember a couple videos back, just go back. It might have been the last video I put up. It was the 1,000. It was close to 1,000 winning trade that I did in the overnights. I got involved in it at. Let me bring my order book over. As you notice, one trade got in at 40.18 at 11:21. That would be CST time. So basically, right after midnight in the next day. So this is actually into October 1st. Now, October 1st, expecting the crude oil market to back off the $40 handle. It's only been there a couple times so far. So I expected another, there was some supply up there that's already been proven prior to this movement. And I was just taking advantage of supply like I would as a positional or a swing trader, and taking advantage of the supply that was up there. I widened my stop out to a 2R stop. So so basically what it ended up being is 55 versus 34 stop. The market actually went 29 ticks against me, so it got close to stopping out. But the 35 ticks was the movement. So it got within what 7 ticks of stop. Oh no, 29, 55 versus 29. So it got within 6 ticks of stopping me out, but it did not stop me out because I basically know how far I want to risk the trade. I knew I couldn't risk 3R, but I knew I could risk up to 2.5R. So I knew I couldn't risk the 3R because 51.3 would have me failing the 30K combine or my what the hell is this called? Pro-funded account. You can't go above 50 ticks in any given day. One of the greatest challenges that I have as a trader is how much loss am I willing to take in any given trading day, knowing that I want to trade more as a positional trader than just hitting as a day trader. I've widened my stop out to at least a 2R stop in the overnights, especially. A lot of times if I can get that 3R stop or close to it, I'm okay with that because I know I'm going to go after at least 50 or more ticks on any trade that I'll hold overnight. That's a minimum goal that I want to hit. So you see that the market, it filled me at market at 744. So let's go and look at the trade. This was the, look at that. What a crazy movement. I want to bring the 10-minute chart over in a minute so that you can see it. So let's see here. So I got involved right here at 23.22, and this was a very similar setup as I saw a couple weeks ago when we had, let me get my screen draw tool out for you real quick. So basically, let me get this. We've had a high and then we've come down. We've had another little high coming up, and we were floating around like this, and what I was expecting for it to do, which it didn't, it never did go above this high. It got close to it, but did not go above that high. So if you're looking at the daily highs or the hourly highs, it did not cross the hourly high. It got closer this time, but then it broke down and actually went lower than the last low. So we see that today it's pushed down a little bit lower than the previous low, and I can show you that on the charts itself as I'm bringing over the hourly chart. So maybe this will be an easier way of seeing it. So here's your hourly chart, and here is looking back to here. Now I measured it from this move right here, looking back at September 24th. Or was it right in here? I forget which day. No, it was right in here. This is where I measured it from. So if we use this, this, and this, you can see that this one actually comes out to a little higher than the other number. I think the other one said 37.99. This one says 38.13. That makes sense because these will have different numbers than the 15-minute and the 10-minute will show different. But basically, it's the same ballpark that you're looking for, the 100% retracement. And here was where I was looking for to get out in front of. And oh, and there's the fourth mark, the S1. So I didn't even think about that when I'm thinking about it. So I knew I had three. We actually had four areas that we were going after. So the more that you can accumulate when you're looking at your trade, the better off that trade can be on the movement itself. So in this case, you had the S1, you had the chart itself with the 12P chart that I use. You had the magic number at 137.5 degree angle, and you also had the Fibonacci extension working for you. All four of these things are working for you, giving you a really nice trade setup. Looking back at the past. So here's your past, here's your high of the previous high, and here was the retracement, and here's the fallout of this trade. And like I talked about, it went a little bit lower than the last low, like I talked about prior, right? So then hopefully you can see that a little bit better on the hourly chart as you could on the 10-minute chart. But this was a really beautiful trade setup, and as it made this high right here, it has, which was that one black bar in the last 1, 2, 3, 4, 5, 6, 7, 8, 9 hours. You don't see that very often. So this movement from high to low, what we got here, 37.89 versus 40.47. What is that? Almost, is that, oh, let's just plug it in. 40.47 high, if you got all of it. You got the whole move. We were lucky enough to get on the high to the low. It's 37.87. Is that right? 260. Let's do that one more time. 40.47 minus 37.87. Yeah, 260. So that was worth $2,600 per contract if you would have been able to sell the high and buy the low right there. So that's how much this was worth. I personally was only able to grab 55 ticks on the trade. I wished I'd have got more. If I was a smarter trader, maybe I would have been able to get a little bit more on the trade. So here was my trade setup, and I was willing to risk it minimum 35 ticks on a trade, which would have put my stop at 35 over 40.18. 40.53. So let's see here. Right about here. Now I probably would have been willing to risk above the R1 line, around 63. But just for example purposes, what I had was 40.53. So I didn't want to lose a whole hell of a lot in the overnights. Alright, so this was the trade setup, and you can see I've marked my exit. Now, where did I go to break even? This is where I went to break even, right in here. I noticed that we had already went lower up to pivot, down lower up to pivot, and it was right in here is when I was moving to break even. Right in this area as we were running this low. I think we were retracing right in here. I went to break even. I figured if we moved back to pivot at this point in time, with everything that I knew about the trade, we had 1, 2, 3, 4, 5 little retracements. So it could pop, which it did. It popped, but this pop could have been a lot greater. It could have been, this could have been the movement if the market wanted to do it, because you never know where that is. I mean, now you look at it in hindsight and say, well, look, that held. So hindsight always works in trading. You look back and say, well, look at that. If and buts were candy and nuts, we all would have a Merry Christmas, as my friend would say. So you see all these movements, and you can expect the market could have retraced all the way back to there, and I didn't want to take that risk where I had 50 plus ticks on the table coming into the trade itself. So I was willing to give up a little bit of profit just in case it would do this. So any day that I can get 50 ticks on one trade is a good day. Now, obviously, if I would have had more than one contract, or had my turtle side of the trade on, you notice the blue line was never hit there, right? The blue line still not hit, and you see it get hit right in here, touching it, and then finally breaking through. Here's your exit point on your turtle side of the trade, if you could have held. So you're here, and then add roughly 10 ticks. So this would have been, whoops, trying to get that line to line up right, but right in there. So here was your exit point, roughly, on the trade. Let's go back and let's do this again. So without knowing how far it can drop, here's your S2 mark, 37.91. What I like to do is go up here, find out where the blue line is on the lowest low that coincides with the swing. So this is the lowest low, but this is the swing right here. So here's where the blue line is at the time of that swing. So 38.19, maybe we're still in this. No, look, 39.29, I think it hit it. 39.29, let's see, how high was that? Nope, it did not hit it. 39.28 right there. Hey, you're still in this sucker. Now, it's here, 37.85. So this is your lowest low, 37.85, and you're going to measure it from here, 38.08, and you're going to be saying, all right, if it gets to 38.18 now, and I don't like being on even numbers, so it'd either be on 17 or 19, so we'll err to 19. I like to exit on odd numbers, and that's a little trick of the trade that you can learn along the way. So there's your exit point on this trade. So let's see here, 40.18. You know what? It'd probably be cool to be at the exit at 38.18, thinking that we got in at 40.18, because that is 40.18 minus 38.18 is 200 exactly. So this would actually be cool at 199, and exiting at 199. So your turtle side of the trade is still on here. So the way I look at turtle, you really can't take advantage of the tortoise side of the trade in 30K combine, or this is more because really in honesty, you need to have 3 contracts to be able to do this. You're going to use 2 at your break even, at your point of attack. In this case, it would have been basically 55 ticks, 57, whatever that was, at 2, and then you'd have 1 at, say, 199. So your 3 contracts a day would be what? 57 times 2, 114 plus 199, 313 ticks. So this is one of those days that, you know, when you're looking at this is the days that make your month, make your year, obviously make your week, and make your day. This is equivalent to $3,130 trading 3 contracts right now if it would take you out up here. The 2 off at 57 and the other one off at 199. Now you'd have to be willing to risk what? 35 times 3 on the trade. So 35 times 3 is 105, right? So you have to be willing to risk in this trade. You had to be willing to risk 1,050 to make 3,130 roughly. Where did I get to break even again? Once again, I wished I would have waited to the 8 o'clock mark. Here was my decision area right here. I wish I would have waited to the 8 o'clock mark. Hindsight, you're always a winner. So here's your 8 o'clock mark right in here. And if I would have waited to 8 o'clock to move to break even, then the pivot point was never in question. Now, right here was my GAN number that I would have exited. I would have exited right here at 38.94, or I would have exited, if I didn't get the 38.94, I would have exited up here at what I call 30. I bracketed the market right here when I was watching it later in the morning. So I was looking for the 38.94, the GAN number, over the S1, or I was going to come out at 39.09. So this was marked at 39.09, I believe, when I was looking at it, and I was willing to give a little bit of room on this. You can see that it definitely exited this side of the trade. The other part of this trade is what I would call the tortoise side, where you take advantage of the extra movement of the market. And you basically, what I like to do is use when the market's moving in my favor, I like to use the blue 200 bar SMA on my tick chart. In this case, this is 111. What is this one now? I think it's 111 now. Let's double check. Oh, this is 333, but I believe it's on, yeah, it's 111 tick chart right now. So every 111 produces a line, or a bar in this case. So every 111 ticks or trades, however you want to look at it, produces a line, and this looks different than, say, your 10-minute, your daily chart, and all the other charts that you're looking at. It produces a line every 10 minutes, and you see the open, high, low, close, and then you see open, high, low, close on this too, and the candlestick pattern. But I like, on my 10-minute chart, I like to have it as a bar chart, because this is how I learned how to trade to start with from the very beginning. I see the 10 minutes, and notice that the 15-minute chart and the hourly chart I use are candlesticks, but I like to see my 10-minute chart as an open, high, low, close chart, or the bar chart. My part of the personal makeup that makes up me as a trader. All right, so I think we've covered just about everything that I wanted to talk about today. Awesome move. You don't have these very often. Unfortunately, I wasn't able to grab that whole move. If I would have waited to the 8 o'clock mark, I would have captured 100 and I think it was 109. 109. Let me read. So it was excuse me. No, it was 38.94. 40.18 minus 38.94 would have been worth 124 ticks if I wouldn't have moved at 7:44 when I got stopped out there. I moved prior. I think I moved it around 7:15, 7:20 when I didn't. And it's just, it could have moved at this point in time when I moved it. You got to see what the market was doing at that point. It could have minimally speaking, retraced up into this area, and I wasn't willing to give up plus 50 when it was on the table for me. So, in my humble opinion, the 57 ticks by 2 was the right decision to make. If I was trading 3, most likely what I would have done on hindsight, I would have taken my 1 off here, maybe had the 2 at break even, or depending upon how I felt, I could have went 2 contracts here and 1 at the further out target. If I would have played it perfectly, then I would have had 1 here, 1 here, and hold on to the last one above this mark here. Using this line itself on the turtle side of the trade. Obviously, hindsight plays into that, right? So you see all this downward momentum like that. So this is what I would do. What I did was grab 57 ticks on 1 contract. What I see is that most likely speaking, I would have knocked 2 contracts off here, and 1 I would have held on to the turtle line if I was trading 3. That's most likely, I would say, 90% sure that that's what I would have done. I would have knocked 2 off here and held the last one on the turtle side of the trade like I talked about. So plus 114 on 2, and roughly, let's say, like plus 199 at minimum right now on that 3rd contract. All right, this is Dave Knight here from 123daytrade.com. I thank you for watching today. I'm very selective on the videos that I show right now. I hope you enjoy that format. I've slowed my trading down tremendously. Today was only day 5 of my PFA. I know people want to see where I am, so here's where I am overall. I had a negative day, a couple days, and I've had this one here pulled me out of the hole again. So my equity curve has been it's been like this. I started positive, went negative, and now I'm positive again. So that's kind of my equity curve at this point in time. It could have been a lot higher if I could have been able to hold on to it. So what are my goals are right now? I'm trying to work to 5K. Trying to work the 5K in the PFA, and then debate if I want to take all that money and have a Merry Christmas and a Happy New Year, or whatever how long it takes to get there, or turn that into a funded account and trade on it. Still have not made up my mind. I'm almost sure that I know I can get back to the PFA again. Just take all of it and go back to step 1 again. That's kind of where my leaning is right now. All right. All right, Dave Knight here for 123 Day Trade. Thanks for watching. Thanks for being here. We'll see you on the next video that I put together. Bye for now.